Welcome to Unpacking the 2023 Housing Market with BAM YouTube. I'm Byron Lazine, hosting alongside David Childers from Keeping Current Matters, KCM. Let us know as you jump in here on the live YouTube feed. Let us know in the live chat which market you are tuning in from and what your market looks like today in what you're experiencing on the ground floor. David's going to go over exactly what you need to know to articulate the housing market overall to your clients, to your database, to people that you're meeting each and every single day. See, David has a way with words when it comes down to breaking down the housing market in an articulate and understandable way. And David, if you look back at November and December, as a real estate professional, as an agent, it looks completely different than the first 24 days of January 2023. Right. And so if your talking points are still quarter four, they're not going to hit here in quarter one. So give yourself a little introduction for the few people that don't know who you are. Hit the thumbs up right now. This is the best way to support this live stream, by the way, is hit that thumbs up. Hit the thumbs up if you know David, if you love David, if you're already consuming KCM, let us know with that thumbs up. But break it down, introduce yourself, and then break down exactly what we're going to be going over. Take it away, David.
Yeah, thanks, Byron. I'm excited to be on, and these YouTube lives are fun, and excited to get to share a few minutes together. I opened up the live here on my iPad as well, so I can see questions and see people in the chat. So great to see everybody there. Great to see people joining. Saw somebody in from Atlanta, Georgia. That's where I grew up, so that caught my attention. But Byron, I'm glad to be here. My role at Keeping Current Matters, you mentioned, I get a chance to talk about the market. We have a phenomenal team here that every day what we're doing is scanning what's being put out relative to inventory, prices, sales, forecast, everything out there, and giving agents what you need to say right now. How do you answer the question, how's the market? How do you have a relevant market opinion versus, I don't know, or we're just going to have to wait and see. You can have a relevant market opinion. And I'm going to talk about that today because I think, more than ever, Byron, we have more access to information than I believe any other time in the history of mankind right now, right? We can find that information. We just need to be able to understand it and then get it back in the hands of the clients that we serve so that they can then make an educated decision. And certainly you mentioned this market, how fast moving it is, what, kind of we experienced last year. We're now turning the corner into this year. So we're going to talk about that. So here's what I kind of brought. And, certainly people can put questions in here. We can answer those questions. You and I can talk about those if you'll kind of keep an eye on that as I go through this. But
absolutely,
let's talk about interest rates. Big topic, right? In what's going on there. Let's talk about what are experts saying about this year. What are the forecasts? And then, so if we kind of divide this into three sections, the third section would be, where is there opportunity right now? And I believe there is opportunity. I believe it's a tough market, certainly a declining transaction market that we are in and going into this year. And I think we need to be open and real about the truth of this market, but also say, where is the opportunity in this market? And that's my hope today, is we can do that.
We're going to be, so David, you're going to be going over the mortgage rates, which is a concern for home shoppers and buyers all over the country, no matter what market you're in. And if you're just joining us now, let us know what market you're tuning in from. How to answer the question, the market, how's the market this year in 2023? See, it was different in quarter one of 22. It turned like on a dime about halfway through the year in 2022. And then again, I'd say, coming from December into January this year. This is just what I'm saying. I'm not putting words into your mouth. So how do we actually project that into the future? David, I know there's going to be a lot of charts that you're going to share. You're going to be able to access some of these KCM charts with a free offer from KCM in the link below. But let's go right into it. Are you starting with mortgage rates or are you starting with the market? Take it away.
Yeah, let's start with mortgage rates. Let's kind of talk about that. And here's what I want to do. I want to do a couple of things. I want to kind of step back and say, okay, how do we get to where we are? And then what's ahead? Okay, so I think anybody that is looking at things right now, you have to kind of understand that. You mentioned last year and what happened, Byron, but let's understand that. And then let's look at what we can see about what's ahead. Now, I will say this. When it comes to the topic of mortgage rates, trying to forecast or pinpoint a mortgage rate is on some level a fool's game. It is extremely hard to do. And the minute that you think you got it, like people that are experts and study this every day, they struggle in this area. But we can be educated on the topic. So let me present my slides. Let me go ahead and share those here, and let's see if we can get those up here. All right, so let me see if that works. There they are. So Byron, we were talking about last year, and I pulled a slide that covered last year, and I thought it was a great place to start. And it's something that, you know, if I was on a listing presentation or just having a conversation with my team, I'd be very clear about this. And, you know, the visual element of the reality that 30-year fixed rate mortgage doubled last year. Here's why this is so important to understand. As that happened, one, we've never seen a year in the history of mortgage rates where the average rate on the 30-year fixed has doubled. Never happened before. Second thing, this has been the fastest rise in mortgage rates that's ever been recorded in the 50 years that they've recorded rates. So what did that do? That had a dramatic effect on the market. And you talked about that as we got started, sort of slammed the brakes on the market and had this effect. And we have to understand that. People that we talk to in the market right now need to, on some level, understand that. I'm not saying we have to all become experts on the average 30-year fixed and mortgage rates, but we kind of have to go, okay, that's reality. You know, if I'm going to define reality, that's what happened. Now, if you want to really understand mortgage rates, and I want to give you the confidence sort of to understand that, not to have to become that expert or maybe even give this presentation to somebody that you're working with, but to understand it, you have to understand this. For the past 50 years, the 30-year mortgage rate has moved in unison with the 10-year Treasury. So if you want to know what's happening with mortgage rates, watch the 10-year Treasury. Byron, I used a tweet that you said, or you tweeted, it's probably been a year ago now, where you said, if you sat down with me at my kitchen table and you didn't understand the 10-year Treasury, I would absolutely own you. You know, in a listing presentation, we have to understand there's some basic fundamentals. And what you then want to look at is the average spread between the 10-year and the 30-year. So if you literally took the 10-year Treasury, added 1.7%, if you see the yellow number there, orange number, you would then get the 30-year fixed rate mortgage. So 10-year Treasury, add 1.7, you get the 30-year fixed on average, okay? And so you want to know where things are going. That is how you understand it going forward. So I think that's baseline what we have to really understand. Now, if I were to break down what's happening right now with that, here's what it looks like. So go back and use that example that I gave you. You go back from 2000 to 2021, the last 21 years, average in the 10-year, 1.79, you get the average mortgage rate. Well, where do we sit right now? 6.15 is the average mortgage rate. 3.48 is the 10-year Treasury right now, but the spread has jumped up. See, in the past, it's been about 1.7. Now it's 2.7. We'll call that. I'm gonna make the case that is a proxy or a measure of fear in the market. Been a ton of fear in the market, and that's what's driven rates higher. Now we can go deeper on that and what that looks like. But if we were to return to a normal spread tomorrow, and I'm not saying we were, we'd be between 5 and 5.5%. Okay,
in line with what some are projecting right now.
Sure, absolutely. We think the target rate that we're heading back to is about 5.5%. But you add recession in there, you add these other pieces. But I think just psychologically, as we enter into this year, rates are going to come down. We get into the fives, and it's going to change the buyer's perspective. Now, I'm not saying that we're going to see a frenzy in the market, but things will change. Now, let's keep on this kind of trajectory. 1.7 is that average spread. We know it jumped up. And so what's going on there? And you asked about the Keeping Current Matters team. What our team went back and did is we graphed the spread over the last year between the 10-year Treasury and the 30-year fixed mortgage rate. And it's fascinating because it tells us something. it tells us right now that the panic is starting to subside. If you look at this goes all the way back to January of last year. And we've gone through the year, and what happened, if you kind of dull that out, we started off the year, and the Fed came out about midway through the year and said we need to reset housing, right? And everybody's like, well, what does that mean? That doesn't sound good, right? And panic ensued in rose. And what do we see in November? What are we continuing to see? All right, we're seeing better news on inflation, and panic is starting to subside. But there's still about 1% difference between the 10-year Treasury and the 30-year fixed right now. And we believe as we go through the first half of this year, I would say the middle of the year, we're looking at being in that target rate position of 5.5%. So how do I give good advice to my clients right now? Because I think if you sit down with somebody and you say, well, that sounds great, interest rates are on the way down, panic is starting to subside, we're certainly hearing that from experts in the market. They're like, great, we'll wait, right? Sounds good, we'll wait.
When I hear that from a buyer perspective, that would be going through my mind, especially knowing, if I understand that we just dropped under 1 million housing units nationally just this past week, and we're at 970,000 housing units. I'm like, okay, inventory only has one place to go up over the spring, and potentially interest rates coming down. Why wouldn't I wait as a buyer?
Well, there's two things right there. The first question I would have is, what do you think everybody else is going to do?
Bingo.
What do you think everybody else is going to do?
Yep.
Now, I want to give you a perspective. Go ahead. Were you going to say something?
Well, yeah. If everybody comes out at once, you see an ultra competitive environment. Just in the chat, let us know if in the last 2 weeks, as mortgage applications shot up 28%, and then last week, another 25% on top of that. Okay, those are 2 7-day spreads. If in the last 14 days, you saw activity go from here to here in your market, yes or no in the chat, have you seen more multiple offers in the last 14 days than you did in all of November or December?
Right.
So that's your point, right, David, is when everybody knows this, they're all going to be competing against each other during these time periods.
Yeah. I think that's absolutely right. Now, I want to give you a quote. This came out from Dave Stevens. I don't know if you know Dave Stevens. He was a former Fed HUD official under the Obama administration. Really, really great individual to follow. He said this: be advised, this may be the one and only window for the next few years to get into a buyer's market. And remember, as Federal Reserve data shows, home prices only go up and always recover from recessions, no matter how mild or severe. Long-term homeowners, key word there, should view this market right now as a unique buying opportunity. My head's not in the sand. I'm not saying there aren't issues, and we're going to talk about some of those issues here in just a minute when we talk about the forecast for this year. But there is opportunity right now that we haven't seen over the last couple of years. I'm going to pull down the slides for just a second.
Yeah, I want to dive into that a little bit.
I believe that's the opportunity sitting in front of us right now.
As an agent who's telling their buyers, hey, this might be your window here in 23 over the next 2-3 years. So, if you're saying, hey, I want to buy in the next year, articulating to them that right now might be their opportunity to be what you would consider a buyer's market, when traditional stats, months of inventory, total inventory, would point towards the seller's market.
Right
now.
Right.
How do we articulate to the buyers without coming off as, people looking for a commission, sleazy salespeople, that no, it's actually in your best interest to buy now? What are some of the variables they may want to be thinking about could be going against them in 24, 25?
Right. I think there are multiple things in that question. This came up. I've been on the road the last couple of weeks with Tom doing kind of a roadmap tour. We're doing more of that in the coming months. And this question came up: how do you do that well? First of all, I think it's all in the art of asking really good questions. So let's go back to the Dave Stevens quote: long-term homeowners. So is somebody looking to be in this home? it's not a great market to be flipping in. Now, but you could speak to that, Byron, or somebody else probably better can speak to that. But if you're long term and you're looking, to the future, I would pull from KCM the historical appreciation in this country of a home over 5 years, 10 years, 15 years, 30 years, right? So we know that wins. That's why I can confidently say it's a great time to buy a home. And sometimes people are like, well, you always say that. No, it's because I believe in home ownership. I believe in the long-term value of home ownership. So that's the first piece that I think we have to really get in our heads, and not sort of convince people, but share with them that truth and that opportunity, because it's not being talked about anywhere in the media. Certainly don't turn on the TV or the news and they're like, it's a great time to buy a home. That is not the message that's being sent. But the second thing I would say is that as you look out and think about that conversation, it's all about really, positioning where have we been in the last couple of years. And here would be what I would say. Many people over the last 2 years found it impossible to buy a home. They lost out in multiple bidding scenarios, or they lost out in another reason, or they couldn't get it. Now it's just a lot harder, but it's possible. And that would be my message.
Yeah, and affordability just in the last 60 days, because of the mortgage rate that you talked about, has become easier for home shoppers. You said something there about being excitable about long-term home ownership.
Right.
I just saw on Instagram the other day, I think it was yesterday, in fact, Jason Cassidy. I don't know if you know Jason, BAM creator. He's out of the San Diego market, but on Instagram, he put a post up. Should an agent be a homeowner, or is there an argument that an agent doesn't need to be a homeowner, and they're going to market and they're going to negotiate? And so, being an owner of a home might not be that important to doing a good job representing clients. Well, I think regardless of where you are on that debate, being ecstatic about how home ownership can change people's lives.
Right.
And I'm definitely on the side of the debate that I believe all agents should go through the process on both sides. I mean, if you're at a time point where you're selling a property and you're going to rent for a couple months till you invest in the other one, because you're moving in and out of the market, the market better than anybody. But if you've never bought and sold, and that's not a goal within your first year of being a real estate agent, you're in the wrong business. You want to be able to share that enthusiasm with the market about how buying a home can literally change your wealth trajectory.
Right.
It's like, David, would you want to go hire the trainer at the gym who's 150 pounds overweight and who has never taken his or her own advice? Or would you want the trainer at the gym who's on the diet, who's physically fit, who's doing the things that they're preaching to you? I know which one I would choose. And oftentimes consumers are looking at, when they pick an agent, who has the most confidence and enthusiasm about going and putting down the money and buying the house. That's who I want to work with.
Right. Yeah, I think this, the things that you were talking about in that, the number one way, and I don't think we talk about this as much, that people build wealth in this country is through home ownership. That's just a flat fact. A lot of people have made a lot of money in the stock market, but still the number one wealth creator in this country is home ownership. Now let's look at the last couple of years. I had a buddy of mine, his name is Joel, good friend of mine here. And he grew up in Brooklyn, in New York City. And we were talking early 2020, kind of late 2019, about they were trying to buy a home and, trying to figure that out. I'm not sure if he should. And like, homeownership really wasn't a thing when he grew up. Everybody rented in the city. And we live in Richmond, Virginia. I think some people know that's where KCM is at. Long story short, in February of 2020, he bought a home. And like, I get chills talking about this right now, Byron, because Joel's a guy that, great friend of mine, family never owned a home. He bought a home in February 2020. I joke with him all the time, like, hey, was that a good decision? Like, what do you think about it? And no doubt we're not in that time right now. I'm not trying to say that we are, but if you ask anybody, if you could go back 10 years from now, go back 10 years and say, would you buy a home? And most people would say, yeah, I would, but how many could I buy? And my question to you would be, what makes you think that 10 years from now it's going to be any different?
Yeah.
We know that we're undersupplied in this country in the number of homes that we need.
If I could go back 3 years, I'd buy some more. David, in the chat, Tyler, assuming Tyler is an agent, let me know in the comments. Says working towards my first home. We got more people in the chat working towards my first home.
Yeah.
I would be, side note, agents, I'd be documenting that journey. Here's why I'm buying a home.
Huge.
You know, here's how it's going to help me connect with more consumers, have empathy in the process, be able to understand what you're going through. I would definitely document that process on your own home ownership journey. David, I know you got a lot to share.
Yeah.
I'm going to let you take it back over here.
All right, let's talk about, I've got a few slides here that will be on forecast. Now, Byron, I'm going to give you all these slides. We can figure out how to get them to people. I want everybody to have these. You can use these. Maybe you're sitting down with somebody, or just maybe sitting down with your team or others in your office, just talking about the reality of this market. So let me share those again. Give me just a second. Go ahead.
And David's making everybody an offer here. Go to the link down below. You can try KCM for free. Everything that they do, not just the slides, but all the other great marketing tools that are in the KCM dashboard. Try it for free with the link below.
Yeah. So, okay, perfect. They're up here now. So let's hop into this. So I just talked about it. I don't want to spend a lot of time on this. Lawrence Yun said this: the upcoming months should see a return of buyers as rates have appeared to already peaked and have been coming down since mid-November. We just looked at that. That's absolutely true. And as we go into this year, that should be our perspective, I would argue. Okay, I'm not sitting here today saying we're out of the woods and we don't have any issues. We certainly do. But I think we can look in the rearview mirror and say it's very likely that rates have peaked.
If you're following it closely, if you look at, I've done it the last 2 weeks in a row on the hot sheet, where I look at the 10-year in the morning and I say, I bet you the 30-year will be somewhere around here later on today. And it's been like clockwork. But going through that practice the last few weeks on the hot sheet, I can tell you, David, that the 30-year fixed feels more stable than at any point during Q3 and Q4 last year.
Sure. I think you're right in that. And why is that? Because we're starting to get a little bit more accurate news relative to what the market doesn't want are surprises. Right? That's what we don't want, are surprises. So let's go back to last year. It's like, what's going to happen? The Fed said they're going to reset housing. What's going to happen? And we've kind of said, okay, that's what just happened.
Yeah.
And now we're going into this year, and it's a market that I'm not saying there aren't going to be, there's not volatility. There's not going to be things that we're going to have to deal with, because there absolutely are, but there's less surprise right now, I guess would be my point. I think you're absolutely right. So let's talk about a couple of things that are important to us. I don't know that there are many people that wonder how many homes are going to be sold in this country, but certainly everybody on this call, I think, is interested in that. The latest forecast of 2023 total home sales from Fannie, Freddie, MBA, NAR. This is total, meaning existing home sales and new home sales. Averages about 5 million, anywhere from 4.5 to 5.4 with NAR. If you were to ask me, I think we will beat these forecasts. I don't think we're going to come into a market that we have seen in the last 2 years by any stretch of the imagination. But I think most of these forecasts have been made in November and December, where we're seeing a marked shift, kind of coming into the new year. And I don't think we'll beat them by this tremendous amount, but I'd take the over on these going into this year.
Yeah, I mean, the 4.5 million numbers is one that you have referenced there, tracking towards an average of 5 million. I'd be curious to pick your brain later on the inventory side of that. I believe inventory could help not only get the Fed off of housing's back for affordability reasons, but it could also help us exceed 5 million homes.
We can't sell what we don't have. You're absolutely right. That is the issue right now. We need more inventory. Builders certainly have pulled back, and so I think there's more to this story. I would take the over on it, is my point, though. But if we put this number in context, let's kind of talk about this. What does this mean relative to? Gosh, this is a graphic right here going all the way back to 99. And if you look at it, the last couple first of all, is a projection for total home sales this past year. And then a projection according to NAR for next year was roughly 5.4 million. We'll be in the neighborhood of fewer homes sold this year than really the last 8 or 10 years, depending on when we end up. So the reason I give you that is a very, very different market. This is a market that, I've oftentimes said that the shift in this market, the shift in supply, the shift in demand works in favor of the educated agent. Now, we're going to talk about where I believe there's opportunity right now and wrap up on that in a minute. And we talked before, okay, there is opportunity for buyers, but make no mistake, this is going to be a very different market than the last several years.
David, on this note here of total home sales, and for the agent maybe who's in the chat thinking, well, I'm getting educated, but I'm also just starting. So I don't have this, 10 years of experience, 20 years of experience backing it up. Yep. It's one of the reasons why, David, we're sharing this information. It's one of the reasons why you've made the offer to get people onto KCM for free down below. But I challenge everybody to look at the chart here. And in 2008, 2009, 2010, 2011, okay, that's what we're saying. Hey, we're going to hit a low mark, not as low as that, but the lowest since those 4 years. I would challenge everybody to go into their MLS, look up those 4 years, and look at the agents who were dominating your local market. I would guarantee that those agents are the agents that you respect, that know as the knowledge broker in your marketplace, who never stopped educating consumers, who didn't stop doing the things like follow up and making the calls and all the basic things. So for the agents that are willing to do that, all you need for motivation is to go into those 4 years in your MLS and see that, oh, I'll be just fine doing the right things in this market. There'll be plenty of sales for me in 2023 because I actually care.
Right. Yeah. And I think that's going to be the bottom line. I think the agent that's out there, that's educated, that's having conversations, is pushing through, which is what the market was back then. I mean, all of us that were in the business back then, there were significant businesses built during that time, all across real estate. You know what I mean? As agents, as people that supply. I look at KCM. KCM was started in 2008 when there was a need for agents to kind of go, what do I say?
Yeah.
How do I interact with somebody? And that need has grown, and there's more access to information than ever before. And, it used to be sort of this nice to have that I have the information. And now it's like, I gotta have it, right? I have to be the knowledge broker. I have to be the one that delivers that. And I would be active about it. I would be, getting my message out about our local market. What is happening in our local market? How are those shifts affecting buyers? How are they affecting sellers? Where's the opportunity? And that's what people are looking for. So let me give you one more, and we'll pause for a second before we get into or we can even hop right into it, where the opportunity is. Home price forecast. This is probably one that you've seen. It's been shared a lot. The KCM, tracks anywhere, from the 7 that I would say are out there that we look at. And the first thing that I can tell you right now, Byron, nobody agrees.
Nobody does. I've
on
seen
home price
that
forecast for this year. If you look at the average of all 3 of these, slight depreciation in the market. We've maintained that slight appreciation, slight depreciation in the market nationally. Home price scenarios will be told in the local market in 2023. You have to understand what's happening in your local market. What's always going to dominate price is going to be supply and demand. So what I want to start to look at is transactions, pending transactions, actives in my market, and make comparisons to those, right? So I want to look at, okay, where were active listings a year ago? Generally speaking, you're going to see actives up in just about every market. Where were pending transactions? Generally, you're going to see pendings down. So I want to start to measure that, and that's going to help me understand what's happening with pricing in my market.
Yeah, there are some markets where surprisingly Northeast for whatever reason actives are not up. But yeah, I would agree. Overall, most of the market. Let us know in your market
Yeah.
right now. Do you have a feel for your MLS? Are actives up from a year ago, or are they down? And then how about pendings? Assuming, like David said, that they're definitely all down. This forecast here, if I'm talking to a seller about, hey, where do I want to lock in and grab my equity? Do I want to do it now based off of yesterday's comps, or do I want to do it later in the spring, later in the summer? Well, here's a great chart to say there's a lot of confusion about where prices are going. You could throw, I don't know how much weight, David, you put on Goldman Sachs, but you could throw Goldman Sachs in there, and they're at a negative 10% if you want to get extreme.
Yeah.
With this kind of dichotomy. You could say, I don't know how much weight you put on Zillow, but they're closer to 1%. So the confusion is rampant with all these different forecasters when it comes to prices. So if it's me, David, and I'm putting my house on the market, I want the least amount of competition. That's what we're experiencing right now, as national inventory just dropped under 1 million again, and under 1 million units. I want to go out there. I don't want to compete against the 1990 Chicago Bulls if I'm going to be trying to win a game of basketball. That's the end of the spring when everybody's selling. I want to go out against the broke agents of the world at the local Y and just dominate them in a game of pickup. I want no competition on the court. And so if I'm a seller, I want to be in an environment with the least amount of competition, with buyers flooding the market, which market applications from now until May, that is going to be your hot spot for the majority of buyers. And I want to list personally, if I'm talking to a seller now, to get the highest price with the most certainty, because this chart here tells me I don't know what's going to happen with prices into the future. It does give me confidence that if I'm not selling, I can probably bank on a flat equity year.
Right. I think that is the one thing that we can pretty much say in residential real estate, that nationally it will be a flat year. A couple things. You mentioned Goldman Sachs and others. I will tell you a bias that I see right now. Generally, those that deal with publicly traded home builders and home builders in general generally have a little bit more depreciation and negative bias. Okay, those that deal in existing home sales and in resales generally have a little bit more positive bias, and that's not taking somebody into account that's in our business or something, but that's generally what you see in forecasting right now. But at the end of the day, I'll tell you something that I did, and I would encourage everybody to do this. So I mentioned we were on the road in California. In each one of these markets, we're building local market slides, and we're coming out with a local product at Casey. I'm super, super excited about that.
Wow.
But yeah.
Can you say more about that, David? Can you say more?
They don't want me to, but in the next few months, more information is going to come out about that. Byron, we'll do something and we'll talk more about that. I'll probably get myself in trouble if I go too deep on it. But here's what I would do. Let me tell you what I did, because when I made this presentation, people were like, oh my gosh, I got to use this. I would go back through last year and I would take median list price, median sales price, whatever you can grab each month, and I would graph it. And you're going to see a very clear trend. You're going to see up and you're going to see down in most cases, right? Because what is every seller thinking about? Well, the Johnsons sold back in June and they got this.
Yes.
And so we've got to be able to show them the reality, create that expectation of what the market looks like. Okay, bring this in. Where are we at right now? What's projected for the year? If you're a move-up buyer right now, I'm like, oh, that's interesting. That's interesting. Like, I think that's an opportunity for folks that are looking. Two things that we don't know that will affect the market. We don't know how. And this is bigger than this conversation right here. And I'd love to talk to you about it sometime, Byron. We do not know the effect for the next 5 to 10 years on all the people that are sitting on a 2 3/4 30-year fixed.
That's right.
We don't know the effect of that right now. So that will have an effect in real estate. Most of those people are like, we might just hang around, or we might keep that house and keep it as rental. The other thing that we do not know the impact or effect of will be the massive amount of home equity in homes across the country right now. There are a lot of people sitting on a lot of equity, but here's where my money would be. They will put that equity to work. It's just a matter of how they do that.
That's interesting, because we talked about this last year in Charleston when we were at Boomtown. Shout out to Boomtown for their merge there with I want to say KV Core, but it's
that's what I would say.
Same thing, right? So I was like, okay, I was calling it Cold War. You know, you kind of had your angle on this of basically sales were going to drop. Was basically what we were talking about, because if you're locked in at 2.5, you're locked in at 3%, you'll wait and see. That was an easy prediction to make going into an environment where it looked like rates were gonna shoot up quickly. And as you pointed out at the top of the webinar here, the quickest of all time, we actually ended up seeing rates go up. But I haven't thought about what you just said with much depth. What is going to be what are sellers going to do, or homeowners, not sellers, with all this equity? What is going to be their use for it? Are they going to put it to work? You're making the argument that they'll put it to work. So is that a refi down the road? Refi, not right now, probably. Or is that some type of move up situation? I agree with you. When you talk about the move up buyer, that's an enormous opportunity, because if they're owning close to median, wow, they're getting a peak price. They're still potentially getting competing offers in January of 2023, and they can move up into a little bit of a softer price range right now. That's interesting.
I think that's the opportunity out of the market. And listen, we can speculate on equity and how people will put that to work, either through a refi, through maybe something on addition, whatever they do with their home. I want to talk. I saw that. What about the boomers? I'm going to talk about that in just a minute. So here's the bottom line: engage in that conversation. Hey, have you thought about that? I'd start talking to people about, hey, people have more equity than ever before in their homes. Have you thought about it? Just curious. Like, what have you thought about? As you're interacting with people. The other thing is the thing that kind of piqued my attention on the boomer question. The other trend, I was talking to, I have to give him credit for this, because I was sharing with him one thing that is a definite trend. You can research this and you can grab information on it. But Jimmy Burgess?
Yes.
Jimmy and I were talking, and I said, here's what you need to go look at. There's a topic called the Great Wealth Transfer. Have you seen this?
I have.
Okay, so Great Wealth Transfer, you're familiar with it. More wealth will be transferred in this country in the next, you may even know the time frame, 5 to 10 years, whatever that time frame is, than ever before.
Yeah, certainly the next 15 years.
Yes, ever before. So go ahead. Were you say something?
Yeah, and it's not when we say the greatest amount of wealth, it's not a little bit of wealth. It's 1/7 of the world's wealth. Okay, 1/7 of all the wealth in the world, the 180 plus countries, 1/7 of it is owned by 77 million baby boomers. This is a substantial transfer of wealth that's about to happen over the next 10 to 15 years. So it's enormous.
This is a non-real estate topic that has every implication for real estate that we can imagine. So let's talk about what we just said. Massive amount of equity across this country. All right, we have a massive number of folks that are going to transfer this wealth over the next 10 to 15 years. So Jimmy and I were talking about this. And he was like, what we really need to start talking more about is probate, and getting into, okay, as things go through probate, properties go through probate, they end up 9 times, maybe not 9 times, I don't know what the exact number is, but it is certainly the majority of times that property ends up getting sold.
Yes.
That's what happens.
Yeah, in the comments, let us know. Have you worked a probate deal? Do you agree with that?
Right. So those are the things that are in my mind right now, relative to prices, relative to what's, sort of taking place.
Yeah, and so probate attorneys are somebody that thinking about how do I set up a niche for myself in the next 10, 15 years. David, I think you just gave everybody it's probate attorneys, right? If there's going to be that kind of because you're right, the majority of the time, anytime I've gotten into a deal with probate, it's very unlikely in my experience that you see one of the, family members come up to some type of an agreement where one of them is going to, buy out the other family members. They never can agree on price. It usually goes to the open market. It's usually a probate attorney that helps select the right agent for the family. And that's an absolute winner over the next 10, 15 years. I agree with you.
Yeah. And how do you build that relationship? By having the facts and having the information. It's not like, hey, like absolutely deal with that professional on a professional's level.
The conversation you're going to have with the attorney. Now, how about this? And I don't know how many have done this. Maybe if you're already a KCM user, you've done this, where you're taking these slides and you're drawing on top of them and you're sending the slide deck to the attorney. Yeah. Looking forward to our 15-minute meeting. I'm going to break all of this down for you in a condensed, top version so that you and the family can make an educated decision. I know you're interviewing 3 agents, but here I wanted to give you a little bit of a head start before our conversation. That could be the separator right there that creates the difference between you and the other 2 other agents interviewing for the job.
Yeah, absolutely. Great idea. And talk about just a difference maker right there, to your point. So let's kind of cover this last piece. What can we do right now? That's really the question that I sort of posed, and I want to share a couple of slides with everybody on here.
Yeah, we're still on the forecast slide. There you go.
Yeah. So what I want to go is we have to control the narrative about our business right now. That is the number one thing, because the story will be told and is being told out in media, and I think it's being told in such a way that generally is going to discourage more people from transacting than to encourage them. And again, there's a difference between being optimistic and being blindly positive. I'm not blindly positive. I don't stick my head in the sand, but I can say there's opportunity. I can't have a conversation. And too many folks right now are sort of stuck in that, well, we'll have to wait and see, and not sure what this is going to bring. And, all the things that we know about, real estate right now. And I'll give you a couple of things that I think are difference makers that I'm seeing. First, we can suggest alternate means of financing. Adjustable rate mortgages are a great product. Buy downs are a great strategy. I pulled this quote from the Urban Land Institute. They said the risk of arms were substantially mitigated by the regulatory reforms put in place after the 2008 bust. Today's ARMs are not the risky products of 2008 or even pre-bubble versions. ARMs are no longer something to fear. They can help borrowers save money and reduce barriers to home ownership. I'm certainly not saying that we should try to get somebody to do something they don't want to do. But, ARMs, adjustable rate mortgages, were given sort of this bad name back in 2008. And they're very different. Somebody asked me the other day, they said, well, how is an ARM different today than it was in 2008? And I was like, well, the first way is you have to qualify for it. That's the biggest difference. Back then, you didn't have to qualify for it. Anybody could get one. It was almost harder then not to get a loan than to get a loan. But that is a great product for the person that enters in to the transaction and understands what they're doing and can help them battle through this affordability challenge. So if I understand there's an opportunity for buyers, I can leverage a product to help give me an advantage. I want to do that. The other is rate buy downs. Certainly a hot trend. If you're not working with a loan officer that understands a rate buy down, or if you don't, I would encourage you to do that. But buyers are exploring alternatives to traditional financing in a period of rising interest rates. They're expected to continue. Buy downs are a less costly alternative to traditional fixed rate mortgages. Seller concession for a buy down is oftentimes more advantageous than just a straight seller concession. So you can work the math on it. And get a lender to kind of walk you through that. But if the seller were hypothetically, making a $10,000 concession, it is more advantageous oftentimes to use that in a rate buy down scenario than just, knocking 10 grand off the house or whatever the case may be. So where do I think the biggest opportunity is, though? And we can wrap up on this. I got a couple more slides. bottom line, the biggest opportunity that has not been around over the last couple of years for agents is expired listings. There's no doubt, and I can prove it to you in the data that we see. Now, you'd have to go pull this nationally, and I would highly encourage you to do it. But if we could active listings last year versus this year, and how we ended up 21 versus how we ended up 2022. In 2021 in this country, about 450,000 active listings. In 2022, ended up about 690,000 active listings. So you have actives growing, more homes on the market, generally speaking. You mentioned the Northeast, Byron, being different there, but also I mentioned pendings, which is like sort of a proxy for demand. And if we look at nationally, pendings are down, demand is down. We know that. So anytime you see rising inventory and pending and slowing demand, that means listings are expiring. Now, there's one secret to this. I mean, we're sitting here on what's today, the 24th of January?
January 24.
The number one day.
We're in the golden month for expireds.
Absolutely. The number one day on the calendar that more listings expire than any other day is December 31st.
That's right.
More agents write that as a expiry date for a listing than any other date on the calendar. So there are four things that can happen with an expire. They can relist with their current agent. They could take the house off the market. They could FSBO it, or they could list it with you. And I would be having, I know you've done a couple of webinars, Byron, where you've done live calls, but calling expired listings is something that we haven't done. No listings expired last year, two years ago. And that is where we need to really focus some of our attention right now.
David, if you just got into the business in, say, anything post March 2020, expired listings, what is a foreign language to you? But maybe Eric can drop the link in the chat for the expired live call session that we just did. It's a 2-hour call session, and we go through the entire deal there on how to call expireds.
Right.
And this, you know what, we're sitting here on January 24th. To your point, December 31st, January 1st are the two biggest days for expired listings of the year, every single year.
Yep.
And a lot of those sellers are just, they're done with the holidays. They're kind of burnt out on the whole listing thing, but they're going to relist.
Yeah.
And so now 24 days later after the expiration, when less agents are calling those particular homeowners, if you haven't done it yet, now's a great time to start making those calls, start creating those relationships, asking them, what are your thoughts on the market, to open up dialogue so that you can share some of the information that you just learned here and other places that you're consuming this type of information, or maybe some of the other KCM data that you have at your fingertips. You just want to open up the dialogue.
Yeah, I love those webinars that you've done and the lives that you've done where you've done the calls, and I would encourage everybody to get on that and be a part of that. Now, I would, if I'm doing this, I would do a couple of things, and it kind of goes back to something you said, Byron. I would open up my window for expireds to probably the middle of last year.
Yeah.
Because the second half of last year, what do we know? A lot of people said, I'm not going to fool with this. I don't know what's happening. You know what? We're not going to do this. What do we know that happened in, was it November? More listings were taken off the market than any time before. So I believe there's opportunity beyond just the last 30 days or more recently. I would open that up, and I would have some conversations with people and just say, to your point, open the door.
Yep.
Tell me about what you're trying to do. What was the reason that you were going to sell? Has that changed? Did you get discouraged? Were you just sort of in fear of, I don't know what's going to happen, right?
Yeah, the more curious with confidence that you can present yourself to homeowners in, curious confidence cat. If I was Gary V, I'd make a V friend named that. Okay. We've got some questions coming in. Fire in the questions. We're going to go rapid fire Q&A here at this time. And Joan Hatfield asked, and this is something I've thought about going over on the hot sheet, but I My gut tells me that they're going to solve this problem, but I'd love your opinion on it, David. How might looming threat of government's failure to raise the debt ceiling and debt default, in addition to remaining inflationary atmosphere, affect people's willingness to buy or sell at this time? Do you think your traditional home shopper, home seller is even aware potentially of the debt ceiling? I don't know if you'd even call it a crisis. I think they'll probably government will figure out a solution to keep government open. Any thoughts on that?
One, I think it's political wrangling that we've seen time and time again, right? It's a little bit different scenario right now. Two, I do believe they will solve it because it's to their advantage to solve it. And three, we have zero control over that.
Yeah.
There's nothing I can say. Like if that were to happen, I got nothing for you.
If DC lets it just completely go off the tracks, a lot of these things that we talk about each and every day become meaningless, right? You know, we need a functioning government.
Yeah. And they know that too. Let's not, kid ourselves on that.
No, and I agree. And that's where I've kind of avoided that particular headline and anything as it relates to inflation directly impacting housing. I want to know about that, and I want to dissect it a little bit so that I can speak to it when asked. David, any other questions that caught your eye? There was one question here, and we have an offer down below where you can try KCM for free. One of the questions was, do you work with Canada, Quebec specifically? I don't know if are they referencing KCM data?
Yeah. We get that question a lot. We do not have Canadian, information. We get that question many times. I wish I had somebody I could refer you to that does Canadian information, but I don't. There was an interesting question. You see the buyer's remorse. Dawn asked this. COVID purchases playing a role in the next 24 months. I don't know. These surveys come out and they're like, people said they have buyer's remorse from buying through COVID. Anybody you talk to that bought a house might say on some level, I would have done something different, right? Because the house that I've ever lived in, a year later, you're like, you know what? I wish we had a different closet. I wish we had this, or I wish we had that. So I don't know that that's going to play in significantly. What do you think, Byron?
Well, I just bought one in Q4. And the day of the closing, Nicole, who does the Real Word podcast with me, Nicole, she did the deal for me. And the day of the closing, I was regretting it. I'm like, I don't know. I know my numbers inside and out. And I was still, questioning it. Interestingly enough, though, there was just a survey that went out where Real Estate Witch did it. And I'm pulling up the exact number. I think it's 82%. Yeah, 82% of millennial home buyers have at least one regret from their home purchase. So 8 out of 10 home buyers, maybe that you worked with since March of 2020, if they're millennials, according to this piece of data, might have some regret. Doesn't mean they're going to move.
Yeah, right.
Maybe it's a regret of, I wouldn't have bought something with an in-ground pool because it is a lot of work. And I don't really use the pool that much. Depending on where in the country they're located, it might be just a small regret like that. That being said, if that's not motivation, 82% of millennial homebuyers have some type of regret to keep in touch with your past clients.
Absolutely right. Be curious.
In a market where,
right? Be curious.
Be curious. Hey, I just saw this stat, David. You bought in 2021. I know at the time it was the right house. And I just saw this stat online. It said 82% of millennials, which is you, David, regret some part of the purchase. And I'm just curious, do you have any regrets since your purchase?
I don't have any regrets, but I'm glad you called me a millennial. I remember that. Okay. So,
but that's the script to open the dialogue.
Yeah.
No, Byron, I don't have any regrets. But we were thinking, heck, I don't know if but it seems like we probably made a lot of money on this house. Do you think if I sold it, I'd be up?
Yeah, right.
People talk. Do you think I'd be up? Like it's like we're at the tables in Vegas, right?
Yeah.
And
well, boom, it's that parlay into that. The question I oftentimes get most from people is how much is our house worth?
Yeah.
And just boom, I want to stop right there. And they might be like, well, we totally know that. Or no, that's a great question. We wondered that too. We saw so-and-so sell last year and we wondered, right? And there's nobody in this country that didn't see a home sell in their neighborhood that thought If they keep selling like that, I might just go ahead and put mine on the market, right? And so it's just how do we tap into that?
Yeah, there's an Overask podcast that you can go. I think it's maybe Eric will link it up. It's Tom's Story, I believe, is the name. He does these videos, David, where he just automatically sends them out to everybody that bought a home with him. Hey, I'm just doing the semi-annual health check on your house.
Mm-hmm.
And he does kind of like almost like a green screen type of thing where he'll show the homes that have sold, the last three homes in the area, and where their price is, just like a doctor would do a health check. He's doing a health check. Eric could link that up if you're interested in that pod. Do you, David, current trends in tech layoffs and potential buyers and sellers more cautious at this time? I will say that if I've got a major concern about the second half of 2023, this is just me, I'd love your opinion. If I have a major concern about summer Q3, Q4 of 2023, it would be that there's an acceleration of layoffs. Every day, every week, we see little 2,500 here, 10K there, 18K on a big company like Amazon. Not as worried about some of these, tech layoffs. Those guys are typically okay, big pension, they go find another job or they do a startup. If this trend accelerates, I'd be worried about that. Or if the Fed says we're going to create unemployment in our actions, those two things would concern me.
Yeah, I think the anomaly of this, so let's talk about, there's kind of a dovetail to this, is a recession coming. And you and I have talked about this extensively in different times, Byron. Recession is a name for an economic slowdown. No, by the way, the economy is slowing down. Like, let's just go ahead and say that that's happening. We just haven't put the name on it. And the anomaly of this slowdown is employment. Now, here's what I tend to think. I think the headlines of 10,000 people get laid off at X company, whatever that is, Google, Facebook, whatever, do more to scare people than anything else, right? You kind of said that. I don't worry about that, but I worry about the accelerated trend of that. I think that's the question. What I see from most economists when they talk about this recession, and I would encourage people to be aware of this, is they talk about a mild and short recession. That does not, in my mind, lead to an employment, challenge. I think people will be affected. People will be laid off. Don't wish it upon anyone. And I do believe there is still pent-up demand in most organizations to hire people. Most companies that you talk to are looking for great talent, and they're even willing to invest some of the proceeds of the last couple of years to acquire that talent. So that leads me to be more optimistic than pessimistic on the labor market, but it's certainly something that we have to watch, no doubt.
Yeah, Joan in the chat says total of over 70,000 layoffs in tech right now. Majority are localized, right? So your local market,
absolutely.
If you're, I'm sitting in South Florida right now. There's not a big tech industry here, and South Florida is not impacted at all. San Francisco is going to have an impact. It's why there are many projections this year that San Francisco will see a 10+% drop in appreciation. So every local market's going to be a little bit different depending on what's happening there. And you'll want to know exactly what's going on.
I think that's a great point. I think that's a great point of understanding, and that's going to affect demand, right? I want to understand supply. I want to understand demand, twofold of demand. Is there anything coming into my local market that's going to spur employment? Is there anything happening in my local market that's going to disrupt employment?
And so, David, what I heard from you on this particular webinar was three things. And share this webinar with somebody that you want to have a successful 2023, right? So somebody that you're like, hey, I want to see you win in 2023. You talked about mortgage rates and that they've stabilized, and that it's KCM's belief that it's highly likely we could see a trend go even lower, potentially to the mid fives.
Let
Are
me
we
say that a
comfortable
little
with
bit.
that?
Let me say that a little bit stronger.
Okay.
I think we can say it appears that the peak in rates is behind us, and we
Okay.
are in a downward trending environment. I would absolutely say that.
Perfect. So we are in a downward trending environment. Say that with confidence, like David did when we're speaking to people that are concerned about the mortgage rate. The market this year, David is on the over for plus 5 million home sales. That means there's going to be plenty of opportunity for your personal business in the market. There's a lot of confusion, David said, on where price is. But if you look at that chart, and you can grab those down below, you can try KCM for free down below. If you look at that chart, it appears that we're probably just going to be flat. So all the TikTokers talking 20% drops, 30% in home values, trying to scare the living heck out of people, none of us believe that that's going to happen.
And let me say something. If you'll keep an eye for this, you're already seeing that start to happen. You're already seeing news reports going, it's probably not going to be as bad as we thought because of inventory, right? Inventory has been the stopgap. There just isn't the inventory on the market that would would dictate prices falling at a dramatic rate in this country.
Yeah, totally agree, David. You are a pleasure to listen to. You do have a way with words when it comes to breaking down the housing market and allowing real estate professionals and agents to articulate this with confidence and clarity to their database, to home shoppers, to home buyers and sellers. Take advantage of this opportunity right now, this January through May timeframe, where there's going to be a natural uptick on the interest in real estate. You're experiencing it in your market right now. Don't sleep on it. Take advantage and go out there and help more people. David, thank you so much. There's a link down below. David's been kind enough to provide a free opportunity for everybody to grab KCM data and check out their dashboard and check out all the cool marketing that KCM provides so many real estate professionals. Really appreciate you taking the time today, David. Thank you.
You got it. Thanks, Byron. Glad to be on with you. Always enjoy these, and grateful for everybody that joined.
Thank you very much. Have a great day.